Let's shift our attention to Nigeria, where an acute forex shortage persists, with reduced capital investments in the country being blamed for the current situation. Data from the state-run statistics agency shows that Africa's biggest economy recorded its lowest capital importation in over a decade in the third quarter of last year, only attracting around $650 million. Analysts want to see increased efforts to attract new foreign investments. Deji Bademosi has more.
The report on Nigeria's capital importation is a stark picture of the country's current struggles with attracting foreign investments. Breaking down the $654 million total capital importation for the third quarter of 2023, the report by Nigeria Statistics Bureau shows the country was only able to attract about 60 million foreign direct investments. Foreign portfolio investment was put at $87 million, while other investments accounted for just over $500 million.
One of the problems that declining FDI has actually brought on our economy is that we are losing, our earnings in dollars is actually depleting, is actually reducing, and that is affecting our foreign reserves. Our foreign reserves continue to deplete on a monthly basis because the country's economy is, battling with managing the official rate of the dollar to the parallel market rate. The supply of dollar is actually short.
Some international firms operating in the country have had to close shop, partly because of the exchange rate crisis, which has made it difficult for many foreign investors to repatriate their funds. Nigeria's President Bola Tinubu has been leading efforts to woo back foreign investors into the country, making several pitches abroad.
These are good moves, but it is not enough yet because we've not started seeing the benefit. It is still on promises and promises and promises. The question is, when are we going to begin to see these investors, establishing in the country?
The government is optimistic that it's only a matter of time before the narrative changes. It's rolled out several policies and incentives to attract foreign capital. It's also relying on its national budget to make a difference.
The budget is lining up the economy for domestic investment to come in, for foreign investment to come in, and it is providing options by way of private-public partnerships, and even privatizations are mentioned in this budget. That is the direction of travel: a stable macroeconomic environment in which investors can come in. Government is yielding ground to them, allowing them to come in and invest.
The government's effort is beginning to show some positive signs. Recently, Total Energies committed to invest around $6 billion over the next 5 years in the country's oil and gas industry. Authorities will need to chase more of that kind of investment to change the narrative over the state of foreign capital inflows into the economy. Deji Bademosi, CGTN, Lagos, Nigeria.